The Reserve Bank of Australia is expected to lift interest rates today in response to soaring levels of inflation across the economy. The cash rate is expected to be lifted by at least 15 basis points and could jump by as much as 50. Joining us live now is Richard Holden, a Professor of Economics at UNSW Business School. Good to see you, Richard. Thank you so much for your time. What is your expectation about how much the cash rate will move today?
Well, I think you framed it exactly right. It'll be somewhere between 15 and 50 basis points. The RBA is a reasonably conservative institution, so I wouldn't be surprised to see it go up 25. But if it did go up 40 or 50, that would be a signal that they're really going to try and knock inflation on the head before it gets out of control.
And this won't be the last, will it? Are you expecting we can expect to really see hikes every month now until the end of the year?
Well, something like that. You're exactly right. It won't be the last. I think you can look for official interest rates to end up back at a more kind of normal level of about 2.5%, maybe as high as 3%. Now, I doubt that that will happen this calendar year, but over the next 18 months to 2 years, I expect that's where it's going to get back to, and that's what markets are predicting and most forecasters are predicting. I mean, it's important to remember that we've had an incredibly unusual period, still recovering from the 2008 financial crisis and then having a pandemic, and that 0%, effectively 0% interest rates are not normal, and we're always going to go back to a different kind of normal.
What sort of reaction did we see after last month's cash rate? Did we see any real changes? How did the property market react?
The property market certainly hit the brakes. I think people came to the realisation that the era of incredibly cheap money was over. You don't often see large price drops in house prices in Australia. People don't like to sell and lose a lot of money, so that really only happens if people really have to sell. But what you often do see is a kind of a grinding halt in property prices, and you might see that for a really extended period of time. Small falls, very unlikely to see increases.
So, Richard, broadly, how well placed do you think mortgage holders in this country are at this point to handle the rate rises that are coming? How big a proportion could be in real strife as a result, do you think?
Well, as of a few years ago, the evidence from the banks, the big four banks, and the RBA themselves suggested that most people had a reasonable amount of equity in their home, and that they could withstand rate rises of the type we're talking about. I think the wild card is in the last 2-3 years or so, there's been a real splurge with prices going up a lot, borrowing levels getting a lot higher, and people seemingly betting on very, very low rates for an extended period of time. So I think the real wild card is people who bought in the last 2 or 3 years. How indebted are they, and how well placed are they? Do they have the income to withstand, big increases? And I think we don't know the answer to that yet.
Richard, the RBA has copped a bit of flack in recent times for perhaps leaving it too late to act. I see that you're part of a group of economists raising some issues about the nature of a review into the Reserve Bank itself. What are your concerns?
Well, I think the RBA basically has one main objective, which is to keep inflation within a target band of 2 to 3%. Until extremely recently, inflation had actually been below that target band for the entirety of Philip Lowe's governorship. That's not, exclusively on him or the institution. Conditions have been difficult, but it's really good practice around the world, and we've seen it with central banks from the UK to Sweden to Canada, and the Bank of England in particular, as I said, mentioning the UK, have had these kinds of reviews from external parties. That's just part of good management of an institution, not to try and point fingers or scapegoat, but just to make sure that the legislation's appropriately set and the institution has the right tools available to it in order to be able to do what is an incredibly important job for the Australian economy. An independent Reserve Bank has served the country incredibly well, and I think a large number of people feel, myself included, that it's important to make sure that those tools are fit for purpose going forward.
Well, it sounds like the new Treasurer, Jim Chalmers, has been listening to your concerns raised with other economists, so we'll watch that space and see where they land. Richard Holden, a professor at University of New South Wales. Appreciate you joining us, so thanks so much.